Mic check. What's going on, everyone? This is Jordan with Conquer Trading and Investing, getting ready for our first public live stream in 1 year. It was about 1 year ago today that we stopped the public live streams. My daughter started going to school in a different area. I was driving her. Here we are 1 year later. She's at a different school. I've missed you all. What a joy it has been to start and continue this journey with all of you. I wanted to jump on the mic today. I wanted to get on the YouTube and see what it was like to go live with you all and just kind of like, take it as it comes. Here we are this morning. I wanted to go ahead and cover some markets with you this morning. Later today, we have the FOMC meeting minutes, something that Justin actually brought to our attention over the weekend as we were putting together some high impact news ahead. Aside from that, 25th, 27th of this month here in August, we have the Jackson Hole Symposium. That could be used as a big communication point from the Federal Reserve to speak to the market, as well as the meeting minutes are. We all know during the press conference, Powell was interpreted to be a little bit, let's say, dovish. And since then, Fed speakers have been quite hawkish. That right there, though, is that verbal intervention that we are used to. Market so far has been keying off of Jerome. We'll see what happens today in the minutes. Also, a big deal today out of the UK. We saw a surprise hot inflation print year over year, over 10%. By the way, just let me make sure that I got some voice with you going. Mic check, mic check. Are we all good here in the hood? Oh, yeah. We're all good. No audio. Boom, 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 boom. Do we really have no audio? How's that working out? Can I just get boom, boom, boom? Oh, we got audio. Thanks, John. I'm gonna keep going then. Thanks for letting me know. If you don't have, I was gonna tell someone, hey, if you don't have audio, try refreshing your browser. But it's not as if they'll hear me. Thanks, Matt. Everyone, letting me know. Kenneth. UK year over year, surprise hot inflation print. Market right now is not taking too kindly to that. You're seeing risk reverse. By the way, let's take a look at that over here. It's not only risk. You could see the 10-year, right? 10-year bid up on that. Look at this. This is coming to this yellow line of caution, trading above it. And then we could see yields continuing to rise. Now, I don't think that you're going to see yields in the United States really keyed too much off what's going on in the UK. We were talking about the calendar, what's ahead. After Jackson Hole, we have the first Friday of the month, of the new month, will be non-farm payrolls. That's going to be an important one. And then after that, we have CPI. Next month, CPI will be a big print. That sets up the end of the month, the FOMC. Those are the high impact news events on the calendar. We like to follow what's happening on the charts. But by going ahead and making sure that we are following the greatest signal in the markets, and that is central bank activity headed by the Federal Reserve, we're then able to go ahead and swim with the current, making sure we stay on the right side of the market. In between meetings, watching right now, we're watching yields, we're watching the dollar, we're watching oil, and then from afar, we have to watch, obviously everyone's aware, natural gas just right now. Totally going parabolic. We have to watch food-related commodity prices. When we, and I say we because we were a few weeks ahead, but as the Federal Reserve now says they've become data dependent, it literally means it really matters what happens in the data as to what is the next move of the Federal Reserve. Let's take a look across markets right now. I want to start off with the NASDAQ, right? And we could see that from this downward sloping channel, this descending channel, we've had a breakout. This yellow line over here was right before last week's CPI print. And you could see coming into it, this is where we pulled back to on the CPI print. We broke out of the channel. We've come in for that retest, classic CTM, and are resuming up right now. This yellow line is the line in the sand. From my perspective right now where we are, if we break below the low pre-CPI print, this structurally is showing a clear breakdown. you could see that we would be heading back into the channel. Let me go ahead and see if I got this tool up or not. All right. Rolling over. It's good to be here with you all. I hope you all are wonderful and doing well. Really feels good to be back with you all. I'm not focused on any of the comments right now. I'm focused here on the charts. I will swing back and check in with all of you for sure. That's right. There's no question about that. We are seeing, without a question, demand destruction taking place. What does that mean? Whether or not it's people, I do the grocery shopping for the household. We got a big household, 6 kids. There's 8 of us. I was talking about last week. We go through lots of eggs. Eggs in the past year have risen roughly 50%, right? You go fill up the gas. If you have 1, 2, 3, whatever, it's expensive. For sure, everyone is feeling it. By the way, when we talk about near-term expectations, and right now, my near-term expectation is that we're seeing a peak in inflation, a near-term peak, maybe an intermediate peak if we're lucky, but I do expect that we see once that wave comes in, that current comes in a little bit, as it pulls back out, inflation is going to get way worse than it was. This is sticky, and you know what? That's why we're here. We got to find a way to make sure that we protect our future. All right. NASDAQ so far continues to look good. I've kind of, at this particular moment in the markets, as you're going to find out, everyone knows that I'm pretty big on trendline breaks as they offer, let's say, the best way from a risk to reward standpoint to go ahead and manage your risk. You get in early, and therefore you're able to know and get out the quickest. Now, at this particular point in time, I've kind of deviated that. Not, I mean, just right now in the markets. Maybe it's because the markets are almost on wait and see. I'll give you 2 examples. One of them is on oil, right? CTM has done a good job in over here in middle to late June. First of all, identifying the sell impulse that took place in this area and then being able to ride it through. We had a couple of extensions. Here was one in this area over here. And then normally you might see something like, well, you know, I don't know, let me go ahead and cherry pick it, you know, like this. I might be like, I'm trying. Like if that was a trend line break over there, it's not really. But what we've done over here, you know, is we've gone ahead and said, okay, that right there, that was horizontal resistance. And as this move came up last, it has kept us in the trade, and that continues. That's just one example, probably not the best example to show you. I'm going to show you again here on the DXY. We have another great example. I'm not using CTM charts. That's what the problem is over here. Let me revert over and pick up some CTM charts, and then I'll be able to, hold on a second. We'll get it. Here we go. Here we go. This is kind of like me this morning, on the spur of the moment, jumping on. Everyone knows I spend a pretty significant amount of time preparing for all sessions. And you know what? In this moment, I'm just enjoying being here with you. So I'm gonna just take it like that. You know, I'm gonna take it like that. Sherfu, absolutely wonderful. Great to see you. Great to see you. What a joy. Yeah. Well, there we go. This is a great lead in to where I wanted to go next. DXY looks bullish. What do I think? I mean, if you're looking at the DXY, hold on, folks. I'm gonna find the flow and get the flow, right? If you're looking at the DXY, this is incredibly bullish. Wouldn't you say? There's no question about that. We are in a massive move on the dollar. This was keyed off over here, by the way, once the Federal Reserve began or signaling, I should say, that they were going to begin tapering. That was October the 16th in the Fed meeting minutes. That was the clue that they were very clear that they were going to be tapering and then potentially getting ready for liftoff, the raising of rates. And that's when the dollar move began. And since, as we in March began raising rates, it's just been a wrecking ball, right? And, you know, to say that the dollar's not strong, well, you know, this is, I could ask my youngest kid, hey, is this going up or down? And they'll tell me, Dad, that's going up. It's very strong. Nevertheless, here at CTM, we talked about and we got this sell impulse that occurred over 108, and we wrote it down until the breakdown of this red line, this conservative breakdown over here. But then something happened this week. You might have noticed on my Twitter. That's a big move. And by the way, it wasn't like that easy. Before we got that beautiful double black diamond sell impulse, there was one other attempt. Here it is. I'll show you. Like, that was the first attempt. Again, you could manage your risk to reward the best off of a trend line break, because look where the stop is right here, right? So you take the trade, that doesn't work out. Okay. Then what do? Well, you readjust the line off the low. So I come over here and I readjust the line off the low. This one over here, this one continued down. Next breakdown over here, came in for the retest, another retest, broke down over here into this trend line, held as support, came back up again. You see that horizontal box I have over here now? That's what I want to talk about next. That's where it found some resistance. And then it broke down on CPI last week. It broke down and pierced it through. Came in for the retest. It didn't resume down. It didn't make a lower low over here, right? And instead it came back up and now is trading back above. So that move is nullified. That move is nullified. And at that point, I did something a little bit different. I didn't just go ahead and say, all right, well, I have a trend line break over here. I wanted to not get chopped up in the market. And I drew this box. This box, I'm going to go ahead and extend it up right over to here. And this box over here, while we're in it, whether we're looking on the downside or the upside, I'm just looking for price to kind of, be a little bit choppy and sideways. Price is not always straight up and not straight down. And the worst thing you can do is get caught up in a chop. So I'm just standing on the sidelines waiting for price either to break back up to the upside, right? Or break down. But right now, I am out of the market. Even though the dollar is super strong, we've been able to take a nice or ride a nice sell impulse down. This is when people were very adamant, lots of analysts across the market, that there's nothing in the way to 120 on the dollar. It was all over the place. Let's go back to this area right over here. Go back to July 14th and look at your Twitter feed. There's nothing in the way to 120. Well, it's not always straight up and straight down. In this case, we had to follow what price was showing us and the lessons showing us that, you know what, here we're seeing the markets do what they do best, a little bit of mean reversion, and now they are consolidating and getting ready for a big move. I don't know if the big move is up or down. We're going to wait and see. We'll watch it together. All right. Good to be back with you all. Let me jump back and try to find what I'm looking at or where we're going here this morning, or how I'm looking to do it, because, again, I just jumped on here, spur of the moment, and I'm just trying to find off what chart template that I'm looking at this morning. This is what I want to go with here for the live. All right. So we're seeing this morning, once UK inflation came in hot, markets got quite a bit of a reality check. Risk coming off this morning. You could see that very clearly happening with crypto, Bitcoin. Coming back off its lows on the day now, down 1%, Ethereum down 1.5%. Is there anything to read into before this afternoon's FOMC meeting minutes? I don't think so. It's going to be interesting to see right now as we are seeing equity markets open up, to see what the first 20-minute brings and whether or not we have an extension further down of this morning's momentum, or whether or not price just kind of finds some type of equilibrium, waiting on further data from the markets. Again, we are in a data-dependent market. Oil has been also a joy. Oil is another example of something that CTM has done very well over here. Around this time in June, late June to July, we were saying, well, it looks like potentially inflation is peaking. Remember, the markets moved off of the hot 9.1 inflation print. That's when so far risk has bottomed, because most likely the markets are deeming that to be the peak in inflation. Again, near term, maybe intermediate term. Then the month after that, the inflation print came in at 8.5%, and that risk rally extended, and people were kind of mocking the market. And they're like, 8.5% year over year inflation, and the markets are rallying. No, the markets are not rallying off of that. The markets rallied off the 9.1. They're rallying off of looking forward and noticing that most likely going forward, we're going to see inflation starting to come off. And that might offer the possibility for the Fed to soften its hawkish stance. At the next FOMC meeting, that's exactly what happened. Powell came in and he verbally was a little bit dovish, data dependent. And then we move forward. If the data continues, and you're seeing it in oil, this is why this conversation is coming up right now. Oil has come off drastically, right? What is that going to do as far as food and energy being some of the biggest components lately in the CPI? Well, we saw this month CPI come off. I expect, since there's a lagging indicator, that also next month CPI comes off. And then from there on, who knows? I don't know. We have to watch what the charts do. We have to see, again, if we start seeing commodity prices rising, if we start seeing specifically oil rising, and then go ahead and determine what the future inflation is going to look like. Because right now, that is really what's driving the markets. It's what's caused the Fed to have to reverse course and begin tightening. And right now, what is happening in the markets, and it's caught a lot of people off guards. This risk rally has been tremendous. It's caught a lot of people not positioned for it. And it's a lot of people are looking for it to be reversed, right? If you look at a chart of Bitcoin, it looks absolutely horrific. This is a massive, massive downtrend, right? And people see that this is like not going anywhere. And people are looking for this to go ahead and make another big leg down. Now, that very well could happen. It certainly appears that there's a strong chance that's happening. But it's not a given, right? And until we have any type of signal of any type of trend resumptions toward the downside, well, the move has been to the upside. Now, there really hasn't been much profit to be made from my end on Bitcoin during this move up, right? Now, we've been able to participate and we've taken more than a few different entries, but they really haven't followed through. Ethereum has really been where the money's been made, and Ethereum coming off has really been extending upwards. You could see instead of it flatlining like Bitcoin moving up. And by the way, this is the way that Bitcoin looks. If it is a bottom, who know? And when I say bottom, as I talk about an interim bottom, right? If it is, and we see some type of continuation of this risk rally, it's not really dependent on Bitcoin and crypto. It's depending on the overall markets, right? And if we continue to see, we started this session off looking at the descending channel on the NASDAQ and the bullish technical breakout above it. If we come back below that line, that yellow line in the sand I put out of the CPI, I'd flip to the chart right now, but I can't because, you know, I'm a little bit askew on everything. There we go, right over there. If we're trading back below this line over here, well, then I'm going to make the assumption right now that we're seeing Bitcoin roll over, Ethereum probably rolling over. But again, it's just too soon to make that determination. Speaking of determinations, like you can't, first of all, if you do expect right now, if your posture is very bearish on the markets, now that was generally because of, well, earnings aren't going to be there. That's not what happened in this past quarter's earnings. Earnings actually were there. Now we have to pay attention, data dependent, what happens next quarter's earnings. The other thing that people could say, well, the Fed's tightening, right? Because of inflation. Okay, that's true. So let's look at inflation. And that's what we did. And we were able to see that turn occurring in real time. And that needs to continue. It could turn back the other way. So if you do see Bitcoin and crypto make another big leg down, you also can't be deterministic that that's going to be the last leg down. A lot of people like to have the idea that, well, Bitcoin's going to make one more leg down and then it's going to go ahead and shoot the moon. Why? Because they would love the opportunity to go ahead and buy Bitcoin lower and then just get into a trade and be able to hold it. And, you know, that's not it. It takes a lot of work. That's what we're not afraid of, putting the work in each and every day. So what else? I think that, again, I just wanted to jump on with all of you and get like a little bit in the flow. And that's what we got to do over here so far this morning. I'm going to go ahead and play a little bit of music so I could go ahead and take a look at some of the comments. No, I'm not going to do that. I'm just going to read some comments right now. as we talk. Jose, what's going on? Great to see you. Thank you so much. What a pleasure and a joy to be here with all of you. Sherifu, Fabio, thank you very much. I'm long gold and platinum. Inflation will lead to stagflation, worse, yes, to come. I think that gold is going to continue to do a good job of, first of all, holding that purchasing power. But gold is not really doing anything, and for a long time. We were following recently this on, let me go ahead and show you like this, off of the daily closes. And you see this first trend line connecting these lows over here, right? And then as price came in and started resuming off that green dot, that was an opportunity here up at 1860 for a long on gold. And then you see this other trend line cloned off of it. When I say cloned is you go ahead and you right click it, you hit clone, and then you get boom like that. Now, if I go ahead and go back to you could see the wick coming into here, Look at that. That was a happy accident. I didn't even mean to put that in there. But since it was a clone trend line, you could see how. Look at the market structure and symmetry. It automatically catches that wick into all of the support over here. Look at that support. And then again, that's where the bar's closed. You see how that works? Pretty neat, right? Let me go ahead and get rid of that line and then come back over here. So that was over here where on this entry, again, the first thing you look to do anytime you enter a trade is to, before you enter the trade, you know where your stop loss is going to be. There's no way to position the size of your trade without knowing where your stop loss is. In this case, stop loss was over here if you broke down below the trend line that I have at the bottom. And that was a technical breakdown, right? So at this point, gold seems technically out of favor. Since then, what you've seen happen is price come down and then come back up for a retest. And that broken support has now been turned to resistance, and price over here is seeing if it's going to resume down for another leg down, or it could get back above this current resistance, and that would send it more towards a neutral position. But right now, technically, gold does not look the best if we're returning to some type of growth, right? If we're going to see the Fed extend the cycle out. A lot of people like to think that the Fed is tightening until something breaks. Usually, it takes quite a while for things to break. I think that's the piece that a lot of people are missing. Again, it's not straight up and straight down. I personally think that the Fed doesn't want to break things so that it needs to go ahead and respond by expanding its balance sheet again and restarting quantitative easing, because they know once they do that, then inflation is going to get out of control and they might not have the opportunity to get it back under control next time. So I don't think that the Fed is in a rush to go ahead and, they talk big, but I don't think that what they want to do is go ahead and just tighten, and then cause a recession or something worse and break things unless their objective and their goal is to actually bring everyone to their knees so that they could go ahead and introduce the digital dollar, the central bank digital currencies. If that is what they're trying to do, then I think that they will go ahead and just destroy everything so that everyone's out there begging for them to go ahead and provide a solution. But I don't think we're there yet. Where I think we are is that actually the Fed is going to go ahead and try their best to extend the cycle out further. If we start seeing that happen, how does that happen? Well, first, you already saw a potential peak in interest rate hikes. We've had 275 basis point hikes. Now, this morning, off of the UK's inflation print here in the United States, the market is starting to price in a higher probability of a 75 basis points. That's why you're seeing risk trade-off this morning. It's as high as 60% chance that in September, there will be a 75 basis points. That is what's being priced into the markets this morning. If they have a 75 basis points hike, the market is currently not priced for that. The market is currently priced for a 50 basis point hike. If they have a 50 basis point hike, you're starting to see a peak in the degree of the height of the rate hikes. So that right there is the market turn. If they have a 50 basis point in September, this is the bullish case right now, and then a 25% basis point in November, and maybe no hike or a 25 basis point in December, you've seen the rate hikes peak and come off also with inflation, and then they move towards a pause. A pause gets to extend the cycle out even further, and then maybe even that first rate cut as the market, as the economy continues to deteriorate, you would see then the Fed move towards rate cuts. The first cut may even extend that rally out further. The market may like that. Oh, the Fed's starting to ease. Okay. And they might respond favorably. But the economy is going to catch up to the market. And then all of a sudden, when the rate cuts start coming in rapidly, that's when you have to watch out. That's when you need to be very defensive. That's when things could get very ugly and continue to get ugly until they cut all the way down to zero and then go ahead and have to restart balance sheet expansion. Now, that's just one roadmap. That's the roadmap I have ahead of me. It doesn't mean it's going to happen like that. They could also, and what could happen is that we could start seeing, interest rates and the degree of the hikes start to come off. So we have 275 basis point hikes, and then we have a 50 basis point hikes, and then we have a 25, and then all of a sudden come into the third and fourth quarter of this year, inflation starts picking up. You start seeing maybe crude oil trading back above 120, and then at that point, instead of being able to move towards a pause, they have to start hiking higher. Maybe you see another 50 or 75 basis point hike. That wherever the market's trading at that point, it's going to respond appropriately. So there we are. That's a little bit of thoughts right now. What's going on in the markets as far as, again, the title of this is Bitcoin and Macro. Did a really good job of covering the macro this morning. Bitcoin's kind of, in a little bit of wait and see. Let's go ahead and take a look at it. Let me find out a good view for you, or for me at least, so I could talk about it. And so you could see that Bitcoin is a little bit neutral. On the left, you're looking at the buy side. On the right, you're looking at the sell side. And it is getting very close to triggering, which we haven't seen since the end of July, a sell signal occurring on Bitcoin. That would also, my eyes attracted to this area right over here. This is, you can see the peak down over here where my mouse crosshairs are on the right, August 10th, CPI. That's the pre-CPI low. Getting below that level, right, I would expect a breakdown. Now, here's the problem. My own bias is getting in the way, right? My own bias is getting in the way, and I'm aware of it. And what do I mean by that? I'm going to explain it to you really quick. So I have this as a crutch. When I look at this as a crutch, I see if price goes, and I'm looking at the equity markets right now, right? If price goes below this line, I'm going to say there's a structural breakdown. And at that point, markets are not looking good, right? Even extend that yellow line to the left, you could see this area over here of resistance. Bring it back even further. It was support over here. That's that pre-CPI print of last week. It's a big deal. It's a big deal coming out of that breakout of that descending wedge, which has been already retested and resuming off. Yes, it could be tested again. Breaking below that channel, which is now was resistance, now should be support. That last bit of that little bit of a room is the wiggle room. Getting below there, it looks like a breakdown. If that's happening, that would send me bearish, not just on the markets, but also on Bitcoin. Until that happens, I'm kind of worried, and this is my own bias, right? This is wrong, but guess what? You all have bias. The more you are aware of your bias, the better you are prepared to fight through it. By the way, the best way to fight through it is to trade systematically. I don't have to worry about my bias. I'm taking buy and sell signals on Bitcoin. But nevertheless, what I'm getting out of is my own discretionary bias is this. A lot of people looking for a break. It's occurring right now. That's why we're having some follow through this morning. Do you see that trend line break that's occurring right now, right? So my bias is that you're going to see a lot of people jump and bite at that, and that it's not going to hold, and we're going to come back up. I'm telling you what my bias is, right? And that's my bias. Now, thank goodness, I don't have to worry about that. We were able to just make sure that we systematically are able to stay on the right side, and that's the crutch I do. But nevertheless, I like discussing markets. And by me showing you here right now through the TA, through psychologically why my bias is what it is, I think right there, that lesson is gold. Caleb, what's going on? It's been 1 year, right? We started off this morning since we went back to, what was it, 2 years in a row of daily live streams on CTM. Last year, my oldest started a different school, prevented it from it. Here we are this morning, back sharing the love. All right, everyone, that's this session here today. Thanks for tuning in. Thanks for being here. And it is a joy to see all of you. I saw when I jumped on this morning, really, I wanted to kind of feel it out. And the greetings that you all want to hear and showered me with is so beautiful. And I have to say that I just want to say a big thank you. A big thank you. Really appreciate it. I hope you all have a wonderful day. And may God bless you. I hope to see you again soon.